Hey everyone, welcome back to Corporate Decoder. Today we're diving into COHU Incorporated's latest filing, and let me tell you, it smells like a big financial maneuver that might just surprise you. This isn't your everyday report, folks. This is COHU trying to level up its finances in a big way. If you're curious about how companies get their hands on serious cash and what it means for their future, then stick around. And hey, before we get started, if you love getting these kinds of unfiltered corporate insights, make sure you're subscribed. We also have a fantastic Discord community where we break down these reports together even further. So check the link in the description below. Alright, so COHU, or COHU Incorporated as they officially are, has just rolled out some news about a huge financing deal. They V-issued what they call convertible senior notes that are due in 2031. Think of these like ICE but with a twist. This filing tells us they then managed to bring in a whopping $287.5 million with these notes. And get this, they even sold an extra $27.5 million worth of these notes because they were so popular. So what are they doing with all this money? Well, after all the fees and the cost of some fancy side deals, they V-pocketed about $278.9 million. A good chunk of that, around $28.4 million, is going towards something called capped call transactions. I'll get to that in a minute, but basically it is a way to manage the risk of these notes. The rest of the money, the big remaining chunk, they plan to use for general business stuff, which is pretty standard. Now, about these notes themselves, they read pretty important. The agreement for these notes is with Us Bank Trust Company. These notes are set to mature all the way in January of 2031, unless something else happens sooner, like if people decide to cash them in early. COHU will be paying interest at a rate of 1.50% per year, and they'll pay that out twice a year in January and July. Here is where it gets interesting. Normally people holding these notes can just convert them into company stock whenever they feel like it. They can only do it if certain specific things happen before October of 2030. But once the 15th of October 2030 rolls around, anyone holding these notes can convert them into COHU common stock whenever they want, right up until just before they redue. When they do convert, COHU has a choice. They can pay back the face value of the note in cash, or they can give the note holder cash, shares of COHU stock, or a mix of both. Right now, the deal is that for every $1,000 of a note, you can get about 36.8 shares of COHU stock. This means the price they're revaluing their stock at for this conversion is around $27.18 a share. This is quite a bit higher, about 32.50% higher than the stock price on the 24th of September, which was around $20.51. This is what they call a conversion premium, meaning they re-offering a sweet deal if you decide to convert. COHU can just buy these notes back whenever they want before January of 2029. After that date, they can choose to pay back the notes early, but only under certain conditions. One of those conditions is that the stock price needs to be at least 130% higher than the conversion price for a specific period of time. If they do redeem them, they'll pay back the original amount plus any interest that is owed. Now, what if something big happens like a merger or if the stock gets delisted? This is called a fundamental change. If that happens, the people holding these notes can force COHU to buy them back. The buyback price will be the original amount of the note plus any unpaid interest. Like most big financial deals, there are events of default. These are basically conditions that would trigger serious consequences. Some of these include COHU failing to pay back the notes, not following the rules in the agreement, or if the company or its major subsidiaries get into financial trouble, like defaulting on other loans over $50 million, or even going bankrupt. If a bankruptcy happens to COHU itself, all the notes immediately become due. For other defaults, if enough note holders agree, they can also demand immediate repayment. Remember those capped call transactions we mentioned earlier? This is where they come in. COHU entered into these deals with some financial institutions around the time they priced the notes. These are basically insurance policies for COHU to reduce the pain of giving out stock if people convert their notes. They redesigned to limit how much extra money COHU might have to pay out or how much their stock gets diluted. The cap price on these deals is currently around $41.02 per share. This means if the stock goes way up beyond this price, COHU protection from these capped calls starts to fade. It is important to know that the people holding the notes have any rights related to these capped call deals. This basically just confirms that the notes and the capped call deals are now officially on COHU Incorporated's books, meaning they are direct financial commitments for the company. This part tells us how these notes were initially sold. They were sold to institutional buyers in a way that didn't require SEC registration, meaning they went directly to big investors. These investors then resold them to qualified institutional buyers, which are basically very large financial institutions. And when those notes are converted into stock, any shares issued will also be done so without needing a full registration, as long as certain conditions are met. They also mentioned that eventually they could issue up to about 14 million shares of their common stock if all the notes are converted. Here is a bit about how they announced this news. On the 29th of September, COHU Incorporated put out a press release officially announcing that they had closed this notes offering. We're refurnishing this release with the filing, but it is important to note that this is considered an official filed document in the same way the main parts of the report are, so it doesn't carry the same legal weight. Just a little before the closing on the 24th of September, COHU Incorporated also put out a press release to announce the pricing of these notes. This is also attached as an exhibit. It is worth noting that these press releases are not considered offers to sell these notes or the stock that might come from converting them. Now we're looking at the list of exhibits, which are the actual legal documents backing up all this information. You can see here the actual indenture, which is the main legal contract for these convertible notes. And then there is the form of the actual notes themselves, the piece of paper, so to speak, that outlines the exact terms and conditions. This is the form of the capped call confirmation, the contract for those insurance policies we talked about earlier. This is the press release from the 24th of September, the one announcing the pricing. And this is the press release from the 29th of September, the one confirming the deal has officially closed. Finally, we have the signatures. This is where the authorized people at COHU Incorporated put their names on the line, confirming that everything in this report is accurate to the best of their knowledge. Jeffrey D. Jones, Senior VP of Finance and Chief Financial Officer, has signed off on this one. So let us put this all together. COHU Incorporated has just pulled off a significant financial move, raising a substantial amount of money through convertible notes. This is a big deal for a company of their size. They essentially borrowing money, but they also given investors the option to convert that debt into stock. This can be a smart way to raise capital without immediately diluting existing shareholders too much, especially with those capped call transactions in place designed to buffer that dilution. The fact that they sold an extra amount of these notes suggests strong demand from investors, which is a positive sign. The key strength here is the influx of cash, which can fuel growth, acquisitions, or pay down other debts. The convertible nature of the notes is a clever tool. However, there is also risk. If the stock price performs really well, more investors might convert, leading to significant dilution. The capped call transactions do mitigate this somewhat, but there is still a limit to their effectiveness. The maturity date in 2031 means this is a long-term financing strategy. The interest rate of 1.50% is relatively low, which is good for COHU. Looking ahead, the successful execution of their plans using these new funds will be critical. Investors will be watching to see how this money is deployed and whether it translates into tangible business improvements and stock performance. A major opportunity lies in using this capital for strategic growth, and a significant risk is the potential for dilution if the stock price significantly outperforms the capped call protection. My overall assessment is that this is a calculated and potentially very smart move by COHU Incorporated, aimed at strengthening their financial position for future growth, but it is not without its complexities and potential downsides down the line. Alright, that is our breakdown of COHU Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.